Fonterra CEO Theo Spierings joins us now on the line from Auckland. So good to see you. Want to kick it off, and first of all, if you take a look at these most recent numbers, first half profit increased some 18%.
Yes, that's correct. We have shown good numbers this morning, and not only on profit level, but also on revenue level. So volumes up 5%, revenue up 7%, and net profit up 18%. That's correct.
And what were the drivers behind both the sales numbers as well as that revenue number?
The sales numbers are driven predominantly by the increase of dairy production in New Zealand. So till now we have seen for the financial year a 10% increase in milk volumes. And the value creation, so resulting in a better profit, is mainly driven by our ingredient play, our base ingredients and our premium ingredients. They have delivered 44% more as compared to last year. And ingredients is our core, and we're very proud of that performance.
Theo, are there concerns that there are more supply than demand right now? What is your forecast for the dairy industry going forward?
Yeah, what you see is because of the strong supply over the past 6 months, especially or basically in all the regions in the world, and a continued strong supply of milk. But demand is still staying strong, but that's why you see a little bit of a softening of the prices, because supply is catching up with demand. So we are saying demand is still good and strong. Supply is very high compared to previous years. That's why you see a softening at the moment. We expect that softening to continue in Q2. But after that and long term, we will really see that demand will outstrip supply, and therefore dairy and dairy commodities will be in a very favorable position.
I want to pick up on these dairy commodities. Where do you see dairy prices going into the rest of 2012?
Now, currently we are still in the brackets of $3,300 to $3,500 per ton on whole milk powder. 5 years ago, and sometimes we do forget that, but 5 years ago it was half of that. It was around $1,700. I am expecting some softening over the coming quarter, but it will go back to similar levels where we are now for next year. That's my expectation.
Now, New Zealand has a floating currency, which quite often means a stronger dollar. What do you expect that to do in terms of headwinds for the way the company operates strategically?
Now, the New Zealand dollar is indeed very strong, and we see that coming back in our figures, especially when it comes to translating earnings from emerging markets in local currency, translating that back to New Zealand dollars. That's why you see some pressure on the results coming from our emerging markets, but that's a translation effect. And a strong dollar is not always favorable when you have a strong export position, but it's not affecting us at this moment. But the question is where the dollar is going, and we do believe that 82 level where we are now is pretty strong, it's pretty high. We expect some softening, but it will stay in the 75 to 80 bracket. That's our expectation. And if we are in a 75-80 bracket, we are still in a very good position when it comes to exports.
Okay, last question for you. When you take a look at the future, what are your future plans from both an operations point of view as well as from a strategic point of view?
From a strategic point of view, that's the strategy which we have launched today. We go for an outright growth strategy, so driving volume in line with global demand growth, and value we have to drive that harder, like we did this year from ingredients. But we can create more value with our branded propositions going up the value chain. Next to that, we want to play a role in the developing milk pools in the world, Latin America and China, and maybe in the future in India. And in those milk pools, we really want to link our branded propositions to local milk. So we have a play from New Zealand with exports to those regions, and we have a local milk play. We tap into the milk and we run our branded operations. That's kind of determining the direction long term, but it also says a lot about operational plans short term, I believe.
Got it. Theo, thank you so much.